I use the experience to hone my sales skills. And here's what I do. You get out there, you take off all your jewelry, you look as scrubby as you can look. And basically a car would pull up and I would say to myself, I'm going to sell them red carnations, or I'm going to sell them yellow mums. And I did this for probably, I don't know, maybe 10 times that I did these weekend selling flowers. Totally honed your skills.
The startup investment landscape is changing, and world-class companies are being built outside of Silicon Valley. We find them, talk with them, and discuss the upside of investing in them. Welcome to Upside.
Woo!
Hello, and welcome to the Upside Podcast, the first podcast finding upside outside of Silicon Valley. I'm Eric Hornung, and I'm accompanied by my co-host, Mr. Community himself, Jay Klaus. Jay, what's going on, man?
I am swimming in communities right now. Not a swimming community where I wouldn't fit in because I can't swim, but I am swimming in communities right now.
You can't swim? You grew up on a lake.
I grew up on a lake with a pond in my backyard and I can't swim.
How'd that happen?
My parents can't swim, so they couldn't do the whole throw you in and make you learn it thing because they would have been in trouble too.
You never had a friend with a pool or a friend who could swim who came over and pushed you into the pond?
I did. Lots of people have tried to teach me to swim. I've taken swimming lessons. My childhood swimming instructor gave up on me. Anyone I've ever dated has said, I'm going to teach you how to swim, and they have all failed.
Including Mel?
We haven't really given it a shot. I don't know. We haven't really given it a shot. We haven't been in that many bodies of water together.
Do you think that's perhaps why you guys have lasted so long? She hasn't forced you to swim?
Or she hasn't seen that I can't swim and given up on me and realized that this is a survival risk for future children.
I think that swimming is a pretty natural thing, I feel like. What goes wrong when you swim?
I can locomote a little bit. I can move a little bit in the water now. But with my contacts, I can't really open my eyes and see where I'm going because I don't have good form. So I'm swimming blindly. And I also don't breathe while I swim. So I have a very short distance and I'm very uncoordinated. I'm kicking way too hard. So I just get really tired. All that means that I can basically jump off of a diving board and get to the side and then survive. And that's about the extent of how far I can swim.
How do you feel about floaties or life? Not a floaties on your arm situation. Not like a little baby Jay running out with floaties on his arms, but like a pool noodle or something you can just lounge in the water.
Love it. We went canoeing last week. Love canoeing. Anytime if I have a life vest, I am very comfortable in any amount of water. Can swim with a life vest. Life vests are it's like this floating life-saving cloud.
Yeah, it's nice. It helps you in a moment which could be a bit chaotic. Kind of step back and think about, oh, this is pretty nice.
Speaking of things that are chaotic, but can be kind of nice if you get them right. Today we're talking with Lillian Roberts, the founder and CEO of Xendoo. Xendoo is a cloud-based bookkeeping and accounting service focused on small business owners. And Eric, as we know, accounting for small business can be pretty chaotic.
I imagine people, metaphorically, floating down a river, as startup founders or small business owners, and to them, their version of swimming, their version of the J. Klaus version of swimming is doing the financial and accounting work. It's just, it doesn't come naturally.
By harnessing technology, Xendoo gives their accounting teams more time to work directly with clients and their individual business needs. They offer a low, flat monthly rate with unprecedented service and response. Their monthly financials are prepared by the unheard of 5th day of the following month and are available on their website or in a mobile app. Eric, small businesses only get one shot to get it right. And you and I only have one life to live. And our friends at Ethos Wealth Management will help people live that one life they have to live the best way they can.
And if you want to check out this year's sponsor, you can go to upside.fm/ethos to learn more about Ethos Wealth Management.
Xendoo is based in Fort Lauderdale, Florida, our first Fort Lauderdale company. Founded in 2016, they've raised almost $5 million in funding to date.
Are you more of a Gulf side or Atlantic side of Florida guy?
No idea.
Well, this will be the first trip to the Atlantic side for us. We've been to Tampa Bay.
Right now, it seems like Florida's not where I want to be.
Yeah, that was more of a global question, not a today question, Jay. Anyway, we've rambled on long enough about the Gulf and the Atlantic side of Florida. If you have a thought on this episode, you can reach out to us on Twitter at UpsideFM, or if you have something a little longer, you can reach out to us at hello@upside.fm. And we'll get to that interview right after this.
Hey listener, have you ever wanted to get a message in front of the Upside audience but weren't sure how to sponsor the show or weren't able to do a long-term sponsorship? Well, now you can just go to upside.fm/classifieds and let our audience know anything that's going on in your world, whether it's an event, an application, a special coupon or deal, or just letting them know who you are, what your company does. All you have to do is go to upside.fm/classifieds and you can place an ad on this show. That's upside.fm/classifieds.
So it's a little bit different history than you probably hear. Grew up in South Florida, born and raised. Most founders have some kind of tragedies in their background or grew up poor and all that. So no different than any other founder. Lost my dad when I was 10, and I was one of 5 kids and fourth in line. I was the first one to live past 24. So I lost 3 older brothers, had a lot of tragedy around my life. And I didn't have the opportunity to go off to college. And I ended up doing a trade school. And when I graduated out of the trade school, I started installing ATM machines. So you guys are in Ohio. I spent some time in Ohio working for NCR. That was their Central Technical Education Center. And so my background was, just that survivor, liked to climb the highest mountain, really likes to solve problems, all the typical stuff you see in founders. And I did my first business when I was 28 years old. Prior to 28, I was in engineering at NCR, and then I was in sales, and I think just great skill sets to bring to any company that you're going to own. And then founded my first company, which was a systems integration business, changing desktop publishing, bringing desktop publishing systems and changing out old typesetting systems.
What were your motivations and maybe who were your role models growing up with so much tragedy and loss surrounding you at an early age? I can imagine it would have been easy to really get sucked into not wanting to do much of anything. So what were you looking towards to continue to build yourself up and live the best life that you could?
Thanks, Jay. Great question. What I realized early on, and I realized from a teacher, so my 4th grade teacher, Mr. Syrian, would tell stories in class about life and about family. And so what I recognized early on is that, hey, I wasn't having the usual experience that other people had. So it informed me to say that there's a different world. And then I just, I think that I'm naturally a positive person. And so what happened was we all tell ourselves a story to get through whatever we're getting through, right? Whether the story is, hey, what you're doing is right, or hey, what you're doing is this or that. And so my story was that I looked at the world as that a 30-year life is really, really good, a 30-year life is really, really bad, and a 30-year life is so-so. So when I was into really bad stuff, I'm like, okay, well, this is a plus because I'm going to get it out of the way, and there's, green pastures and blue ocean up ahead. And so I think that's kind of what drove me through.
How long did it take you to get to that idea of that story and telling yourself that?
Tragedy started when I was 10, and I would say by the time I was 14, 15, I was there. And so what I looked for positive people that were happy-go-lucky, and I looked at what the traits were of them and how they move through the world, right? We all get up every single day and we get to choose, is it going to be a good day or a bad day? And if, the last week was just horrible, we get to start over and today could be a really great day. And so I was attracted to those type of people. And the other thing that I was attracted to is hard work. I saw a lot of people go more towards drugs through this type of tragedy and obstacles growing up in adversity. And I didn't want to do that. So I never did the drug scene. Instead, I said, you know what, I'm just going to work really hard.
What brought you to, you said at age 28, you started your first business and it was the systems integration business. How did you discover entrepreneurship and decide that was something you wanted to do with your time?
So and you guys are entrepreneurs, so do we really discover entrepreneurship? I think for me, and for all entrepreneurs, I think it lives within us and it wakes up at a certain point. And so what is that point that it wakes up, right? For me, it was a gentleman who became a mentor of mine and he used to call me kid, and I was selling these systems. And he's like, kid, why aren't you doing it on your own? And I thought, why aren't I doing that? And then that's it. You jump off the cliff. I like to tell people I'm a ledge walker. If they say, who are you? Well, I'm a ledge walker. I love to walk the ledge and I love to pop off, right? I love danger. I love adrenaline. I love excitement and I love speed. And I think it's a common trait of all of us entrepreneurs, right?
Totally agree. I mean, I really relate to the idea of the entrepreneurial urge kind of waking up. For me growing up, I just didn't have any analog to know that was an option. So once I did see someone else doing that, and I understood that as, oh, this person created something on their own, they're not working for somebody else, that was kind of my wake up moment. And I think, a lot of people grow up and their parents are their inspiration, their role models for entrepreneurship. And, that wasn't the case for me. Didn't think it was the case for you.
When I was 27, I made $127,000. And so, when you hear that, you may say, well, that's not such a big deal. When I was 27 was in the 80s, right? So it's like, I'm not college educated, if you think about it. I went to trade school. I was working for NCR. I was making good money for the time then. It was probably, $35,000, $40,000. And I jumped into sales. And the only reason why I jumped into sales is that NCR was starting to make you do sales as a field engineer. And then I knew this guy that was like, 22, and he was crushing it, making $100,000. And I'm like, I went and I interviewed with him. I'm like, he doesn't have anything I don't have. What he can do, I can do. And then that was it. I went into sales.
What have you, I want to stick on this because sales is one of my favorite subjects. What made you good at sales, or what makes you enjoy sales? Because a lot of people are just deathly afraid of even trying, and it's probably the most transferable skill out there, in my opinion. So what made you draw to sales?
100%. That is the most transferable skill out there. Two parts. First, I want to say this about sales. Everybody is a salesperson. If you want to see natural salespeople, just look at little kids, right? So every interaction that we have as human beings with somebody, they're either going to sell us on their idea or we're going to sell them on our idea. And we don't even recognize that that's happening. Like most people don't recognize that's happening. So I guess what drew me to sales was I wasn't drawn to sales. And then with NCR pushing you to do sales, and then I look at this guy and I'm like, okay, if I'm going to do sales, why don't I go make the money? Because to me, the industry, or not the industry, but the job that makes the most money out of anyone, right? More than CEOs, more than anything, is sales. There's no ceiling, there's no limit, right? But sales is kind of like, what have you done for me lately? So unless you're a life insurance or a financial advisor or in that industry, then you have to constantly be out doing the grind. So what attracted me to it was that, to me, it was really binary, right? It was either you're going to sell something or you're not going to sell something. And then based on what you do sell, you're going to make the revenue, and there's no cap. And so once I was in sales, I read books, and I honed my skills. And so during the time that I was in sales, I started out selling copiers. And this is an unusual story for you. I bet you've never had a podcast person tell you that they've done this. So I used to buy flowers on the side of the road on my way home on Fridays because I just love to have flowers in the house. I like happiness, right? You guys can probably sense that. So I talk to anybody, right? So I'm talking to the guy that sells the flowers on the side of the road, and they're in these little 5-gallon paint things. And so I ask him, what's the business model? And he tells me, and he says, yeah, on Valentine's, so-and-so, we make a lot of money. And yeah, there's a guy over there on the Del Mar corner, Palmetto and Military, and he's making $250,000 a year. And I'm like, are you kidding me? $250,000 a year selling flowers?
With flowers?
Yeah, selling flowers. And so I said, hey, would you show me the ropes? Now, ironically, right, because I was selling copiers, I had like a minivan. I'm more of a sports car person, but I had a minivan for the copiers. So I said, yeah, let's go down to the free zone and, go get a couple of 5-gallon paint buckets at Home Depot, and I'll take you to free zone. So I did. I picked my corner. And you know what I did, guys? I used the experience to hone my sales skills. And here's what I do. You get out there, you take off all your jewelry, you look as scrubby as you can look, and basically a car would pull up and I would say to myself, I'm going to sell them red carnations, or I'm going to sell them yellow mums. And I did this for probably, I don't know, maybe 10 times that I did these weekends selling flowers. Totally honed your skills. because sales is about questions and about presentation.
What's the difference between selling flowers, selling copiers, and selling equity to venture capitalists?
There's a lot of things that are the same, right? So skills and presentation is one of the biggest factors that you must have with VC. You have to be authentic, right? So the best salespeople are the people that are authentic and not thinking about what they're going to make, but thinking about how do they bring value to the audience that they're with. To me, there's so many of them that are the same, right? The difference is that the product, when you're selling to VCs, the product is you. They're investing in the horse, right? Or the jockey for the horse. When you're selling flowers, they're buying, they want your flowers to be fresh, right? Now, whether or not they're going to tip you at the end and how many batches is going to be on sales skill, right? And selling copiers is about need. Are you providing the need, and are you getting that are you communicating it properly? So I'd have to say, it would be communication, presentation, and authenticity.
And this is the first company, Xendoo, the company you're running now. This is the first company that you've taken on venture investment, correct?
Yes.
So how did you think about, or how did you talk yourself through the idea of, I'm going to sell ownership and the idea of having a debt now to this person that I'm selling on the idea of my company? Like, did you have any struggle getting through that, having so much success in business before this?
No, I put it on my scorecard actually when I did this. So how I arrived at this business was through a scorecard exercise that I help other entrepreneurs through. And so I intentionally wanted to build a business, and I wanted to have outside investors. And I'm somebody who's generous of heart, so I don't look at it like I have to own the whole thing. I look at it as we all win. Money comes and goes. It's really, what you build inside yourself. That is the measure of success.
What's this scorecard process that you work through and you work through with others?
So I'm an EOer. Are you guys familiar with EO?
Entrepreneur
Organization. So it's
EO or not EOS. You're saying entrepreneur organization.
Right, but EOS is the guys who developed EOS took it really from Verne Harnish Rockefeller Habits and converted it, and they're EOers out of Michigan. So EO is a global organization. It's a volunteer member led. You pay $6,000, $8,000 a year depending on your chapter, and you share what's in your heart and in your head. And it's just an amazing organization to learn and grow. So I love to be a lifelong learner. I applied for a program that they have through MIT, which is called EMP, Entrepreneurial Masters Program. And I went through that for three years. And during that program, Jeff Smart he's the author of the book, The Who, right? Came in and talked to us about top grading and scorecards for hiring people. Basically what I did is I took that framework and I converted it to real life for humans that are trying to figure out what to do next, right? And so if you guys have 2 minutes, I'll take you through at a high level of it. So basically what it is that you take a legal pad, and not digital. You can't do it on a computer. It must be a legal pad, the kinetic, transfer from your arm to your head. And the first page you write personal, second page you write family, then third is community, fourth is financial, and fifth is business. And if you want to figure out what's your next business to do, or if you're in the right industry, you take these 5 pages, and at the top you write those headings, and then you write everything. You do a brain dump of everything that you love and you hate, right? So I don't want to be around stupid people. There's a difference between stupid and ignorant, right? Stupid is that you keep touching the stove when you know it's hot. Ignorant is you just didn't know, right? So I don't like to be around stupid people. So that would be something on my personal. On my personal, I love the sunshine. I love great music. What are the things that make you happy? What are the things that make you unhappy? No judgment. Brain dump them down on each of the pages. Second level of the exercise is come back, prioritize them. Third level of the exercise is that you will now have a scorecard that you can throw any business, any friend, any relationship, anything in your life against and see how it aligns. But you can't be thinking about any of those things when you do your scorecard.
Okay. And so at what point did you do this for yourself? It sounds like this was really kind of a starting point to Xendoo coming into existence for you. So talk about that moment.
So in 2015, I sold a manufacturing business that I had. And all of my businesses prior to that, guys, had been happenstance. It was just an opportunity. It was either a turnaround business or, oh, hey, this is a good opportunity to do this, or let's do that business. And it wasn't where I went into it intentionally. And so when I sold my last business in 2015, I said, you know what? Let me make this next business very intentional. And so I did a personal scorecard, because what happened is when you sell business, a lot of people say, hey, do you want to invest? Do you want to, come on into this business, be the CEO, and I'll give you a little piece of the business and a nice salary and all of those things. And I said, you know what? I have all these great opportunities. I think I had about 15 opportunities. And I said, before I do anything, let me listen to myself that I've helped other entrepreneurs with. Let me build out my scorecard. And on my scorecard, what was on my scorecard around what was the next business I wanted to do was I wanted to help small business owners, because I'm just violently passionate about small business. And so I wanted to help small business owners. I wanted to scale a business to 100 million or greater, right? And not for the money. Like most entrepreneurs, we're not focused on the money, right? Everyone thinks, oh, you own your own business because you're focused on the money. That's a business owner. Entrepreneurs are focused on solving a problem and creating something big, right? So I wanted to create something that was going to be 100 million or greater. I wanted to have the experience of VCs, of outside investors. And I wanted to also start with technology. All my other businesses over time started with other things, and I had to add technology in it because the world was changing. And so I said, let's start with technology. Let's find an analog industry and let's reshape the industry. Be one of the companies reshaping it. And that's how I arrived at. And then from there, I went looking at what were all the problems I had lived in business. What were the big ideas? What were the big opportunities that could be for industries to be reshaped? So I went looking for dumb industries, or analog, right? When I say dumb, analog.
Tell me about the problem that Xendoo is solving.
So Xendoo solves the problem of peace of mind for small business owners, financial peace of mind for small business owners. So what is that problem? The problem is that 93% of small business owners run their business from their books. Now, when we talk about small business owners, guys, a small business is a $50 million small business is considered a small business, right? That's not the group we're in. We're in the small businesses that are, if it's e-com, it could be 15 million and below. If it is a brick and mortar business, then the average size is going to be, say, 2 million, 3 million, but could be as low as 300,000. So we're solving problems for business owners that have 20 employees or less. 93% of them run their business from their bank account. What does that mean? They get up in the morning, they look in their bank account, and they say, yep, I'm going to live another day. I'm going to be able to pay my team. And they don't do financials. And because they don't do financials, they don't have the opportunity to make timely decisions of maybe buying a discounted stock, or stock meaning product, not stock market, or things that they could do in their business, like investing in a new piece of equipment that's going to give an ROI of fivefold in productivity, right? So that's the problem we solve for small business owners. We allow them to spend more time on growing their business and focusing on the things they love to do. We give them the financial peace of mind so they're compliant with the government, they have their tax returns, and they have visibility on how to run their business more efficiently and where they can make investment in their business.
There's such a industry out there for like fractional CFOs. You mentioned that you wanted to start with technology, which is the opposite of a fractional CFO, I feel like. How did you start with technology to create a solution for this problem?
And your background is finance, right? Right, Eric?
Yeah, my background is finance, working with small and medium-sized businesses. So a lot of overlap here.
Perfect. So you're a fractional CFO?
I'm not an investment banker, and we have a private equity arm.
Very nice. Awesome. So yeah, look, some of our businesses do need fractional CFO, and we'll, connect them or work with their fractional CFO. So the difference is that bookkeeping is a very mundane job, and that a small business owner, if the bookkeeping is not done right, they leave a lot of money on the table when it comes to tax, right? So as an example, say there's a pizza owner, and say they've made $100,000 in profit at the end of the year, and they're going to pay Uncle Sam 30%, 30 grand. Well, say in October, their pizza oven breaks, and they're trying to decide, should they repair the pizza oven or do they buy a new one for $50,000? Well, if they had tax-ready financials all year long, then they would understand that new pizza oven for 50 grand isn't really 50 grand. They're going to take $16,000 that they were going to have to pay Uncle Sam anyway, and they're going to reinvest it in their business. So it's the same money out. It just went from one pocket to the other, and the other pocket invested in the business. And that's where the disconnect is for small business owners, because they don't understand their monthly financials. They don't track them, and they're not tax ready. Where the fractional CFOs come in is they're looking more at the business to say, hey, this is where we believe that you could add this type of process and where you can save a couple of points here. So we're not doing that. We're doing more the compliance of tax, giving them the visible picture for their finances. So they could go out and hire a fractional CFO that could help them figure out what they need to do to grow it. Of course, we offer them advice. Our CPA team offers advice and helps them and we can tell them what the industry standards are for different areas. How did I apply technology to that? So it's very much my background in manufacturing. So I was in print manufacturing in the last business, and that's all about seconds of the day, right? So the seconds add up to the minutes to the hours. And so when I looked at this industry, the average bookkeeper can take care of 25 customers a month, whereas our platform, our bookkeepers can take care of 100 to 125 customers a month. So when you add in that technology piece, you can now bring the pricing down. You can make the pricing transparent, right? Because you can package it, and you can say to a small business owner, hey, for $300 a month, we can do this, 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 and this. And because you've put a system process in that's built around technology. And then as we go forward with our technology, we'll have our own ruling engines and things that will serve up predictive financial forecasting for them. But yeah, that's it on the tech side. We build tech first.
What are the technical rails, and you can get as nuanced and detailed as you want here, that help a bookkeeper go from 25 clients to 125 clients? Because that's a huge jump.
So at a high level, it is the workflow process, right? So the software that we built, and if you guys want to read a great article, read by Sam Lesson, The Knowledge Work Cloud. So the easy way to describe what we built, and we had already built this, and then I saw his article like 2 years after, and I'm like, oh my God, finally somebody that completely describes it. So what the Knowledge Work Cloud is it's about data-driven prioritization, workflow, process, and then measurement, burn down, right? And so our technology platform has that. It's not out there in the CPA. Like what we've built, we could license as an enterprise software to CPAs, but I don't believe that the CPA industry has realized yet what's happened, that they're going to wake up, just like taxi drivers didn't realize what happened when, Uber technology, and we're not comparing ourselves in any way to Uber, but that's what happens to an industry when technology knocks on the door and changes it. And so the CPA industry is kind of like the legal industry where they don't give people a set price. It's also like the general contracting industry, right? It's a black box, right? And so you never know what it's really going to cost you. And so what does technology do? It brings transparency. So what did Uber do? Uber brought transparency to what your ride's going to cost and where your person is at. And so what our platform does is it brings transparency to our customers. They know when their bookkeeper has worked on their books. They know how much it's going to cost them and what they're going to get delivered. And then they have 24/7 access to all of the things that they need in a mobile app or the desktop portal. Now, you can't get that from a traditional CPA because they're doing everything manually, right? Whereas our customers just, go into the mobile app and there's their profit and loss statement, there's their balance sheet, there's their last year's tax return, there's their EIN number, there's all the things that they need instead of reaching out to somebody that's not going to talk to them for a week.
I want to tie this to what we spoke about a little bit ago, which is positioning and presentation when it comes to sales. I've worked with a lot of small business owners, totally agree that most of the people I see are operating out of their books. But I think that they would also have a hard time articulating what their problem is or what they're looking for. They probably realize that, yeah, I could use some help on the tax side, but a lot of the stuff you're talking about probably isn't even in the realm of what they're looking for. So how do you present this? What are people looking for when they find Xendoo, or how do you convince them that Xendoo is the solution that they need for their business?
Great way to look at it. Typically, they go for a loan, and the loan officer says, "Hey, we need your last 3 months of financials and last year's tax return." And they don't have financials, and now they can't get the loan they need in the time they need it, or they just feel they're off the grid because they don't have their tax returns. So, I think that there's a bigger awareness of how to run your business properly is to have your financial metrics and your numbers. So I think that there's kind of this awakening that's going across the world about what's proper business techniques. the fact that entrepreneurship now is not looked on like, oh yeah, my kid's an entrepreneur and somebody barely whispering it, right? That now it's looked on like, hey, it's a good thing to be an entrepreneur, and what do you need to do to be successful and to have the right things? So for us, we attract our customers. Most of our customers are looking for us. They come in through online, and we attract them because we're solving the problem that they need emotionally. Would you guys agree that when people look to solve a problem, typically what they can identify with is the emotional feel?
Definitely how they first realize that there is a problem. You definitely like feel the pull of anxiety or, almost like something is missing. So it sounds like if they're coming in inbound, it's coming from them needing, let me just ask this in the way that I'm actually thinking about it. In the world of finance and accounting, a lot of business owners will automatically go to, okay, tax, I'll do like TurboTax. And to get to that point, I'll work with QuickBooks, and maybe I'll even have an accountant sync up with my QuickBooks. How do you drive a wedge in that existing awareness of those tools to say, we actually do something different and we think it's better than those solutions?
So actually, it's not driving a wedge, but it's more like judo, which the customers that know that they need to do their books, they're going to be the easier, better customers, right, to join us because they understand the importance of doing the book. So it's more like, pulling them in the same direction. So we don't replace QuickBooks. We don't replace Xero. Actually, we wrap our technology around Xero. And by the next quarter, we'll also wrap around QuickBooks. What we do that's different is that first, the customer feels the emotional side of it. They have anxiety. They have worry. Are they compliant? They feel behind. They feel that they're lacking in that area. So the first thing we do is we understand those emotions and we talk to them in those terms. And then the second part of what we do is that we speak small business, right? So most of our conversations with customers aren't around their books. It's more around their business. Like, I'm thinking about doing this with my business, or I'm having challenges with marketing. What do you hear as best practices? It's amazing that it's not really around the action of accounting or they don't want to get on and say, hey, what did I spend in my car and cell phone? They don't care about that. They want to know, can I spend money in marketing? Do you see that I'll be able to spend money in marketing in my business and be able to meet all of my obligations financially?
I think something that was kind of implicit that we didn't explicitly say that I want to make even more explicit. When you mentioned that the Xendoo team can handle 125 customers versus maybe the 20 or 25 that a regular CPA can handle, I think I glossed over the fact that you are getting personal support through the Xendoo product, it sounds like. Can you walk us through how the product actually manifests and how I interact with it?
Yeah, absolutely. And also for clarity, we've proven that a bookkeeper can handle 125 customers. We don't have them handle 125. We actually have them, the VCs want to know that you can handle 125, right? But we actually keep them about 60, 65 right now. And the customer doesn't feel like they're one of 65. And here's why. We let the technology do the most mundane and rote of the activities. And we have our bookkeepers doing the higher level thinking that you don't want to replace with the computers. And also the communication to their customers, to our customers together. So how does that work? So their books are being maintained. And we touch the books once a week, right? So we're keeping up with their books. And when we see things that aren't making sense or I can't tell you how many times our bookkeepers have reached out and said, hey, this is a different charge than you normally have. And you know what? It's been fraud on their credit cards. And we're catching it faster than them. Now, that's not something we're going to say that we always can do, but that's a byproduct of us paying attention to their books and touching them every single week. So the team is reaching out in the customer's preferred method. So some customers want a phone call, some customers want an email, and some customers are text. And so how many CPA companies do you know that will text with their customers, right? Or that will even respond, like say, the government can send an IRS notice just for any reason, right? For no reason really is why they send them. So they send you an IRS notice. Here's how that happens when they send an IRS notice. You as a business owner, you open up the mail, you get an IRS notice. First of all, before you even open it, you see IRS and all of a sudden, you tense up, right? You go, oh, this isn't going to be good. You open it up, and now it's some letter that you have no clue of understanding why they sent this and what it means. And now you go and you reach out to your CPA, and 2 days go by, and it's still on your to-do list. You haven't heard back. You reach out again, another couple of days go by. You're stressing. You're thinking there's some kind of problem. You don't know what it is. And then you finally get a hold of your CPA a week later, week and a half later. You've had an unusual amount of stress that you didn't need to have. And the CPA goes, oh, no, that's not a big deal. Just, you know what, mail it off to me or fax it over to me or scan it and email it to me. Unnecessarily after a week and a half has passed by. That's those things that cause me to do this business that we're doing. I can't take that. I've lived that as an entrepreneur. Our business owner opens up the mail. They take a picture with our mobile app that goes immediately to their team. And within 48 hours, we've answered it to the IRS and it's off their hands.
You've mentioned our bookkeepers a lot, and it seems like they are critical, and that team is critical to the success of the business. How do you think about identifying and onboarding talent and continuity of like relationships with clients?
So do you want the skill set I think the onboarder needs, or, define when you say the onboarding?
So in order to bring on a new bookkeeper, what traits are you looking for to say this person is going to fit well in our system and do a good job? And then what is the onboarding process to get them to actually do a good enough job to be client facing? And then what if they want to leave? What does that mean for the relationships that they've built with their client base?
Lots of great questions there. Okay, so let's unpack it a little bit. I'll take it in little chunks. Tech savvy. So we look for people who are tech savvy. So you may think, oh, does that mean that you're only going to bring on young people? No, somebody could be 50 years old, be tech savvy, right? They just naturally pick it up. So we want people who are tech savvy. We want great communicators, right? That they have to have not only speaking skills, but they have to have writing skills. I don't do the hiring anymore, but I can tell you that I always look for people that grew up around small business, so that their aunts, their uncles, their parents are small business owners, because I think then they come with a natural empathy for our customers, right? So we look for those kind of traits. All of our people have degrees in accounting. All of our bookkeepers have degrees, and we have people that are bookkeepers that are licensed CPAs, but haven't practiced as a CPA yet. So very highly skilled on the bookkeeping side. Then how do we quality assure, quality control? So our data warehouse, data lake, provides amazing insights into all of the transactions and allows us to be able to review in a way and to control quality through that. So we get reports, 5 a.m. and 5 p.m. from our data warehouse, which is essential. And then to answer the last part, what happens when a bookkeeper may leave? So how do we manage those relationships? Is that all of our customers have a team. They don't have just a bookkeeper. They're paying $250, $300. Some customers, depending on the package they choose, can pay, $500 a month. But they have a team that takes care of them, not just one person. They were onboarded by one of our onboarding specialists who's not a bookkeeper to connect their banks and credit cards and make sure everything's in order for the team. They have their bookkeeper that they have. They have a supervisor that's also involved with them. And then they have a CPA. So they have a full-blown team. For $300 a month, right, guys? Is that ridiculous?
That's not bad. Upside could afford that.
Yeah. I love it.
What types of bookkeeping or companies does Xendoo not do as good of a job with?
So we're not going to be good with an attorney that does a lot of trust work, right? Escrowing in and out and all of that, because that is subledger work. We're not going to be good with a contractor who wants the job cost by house they're building, because you need somebody internal. So any company that is doing a tremendous amount of subledger work is not going to be a fit for us. But of the companies that are a fit for us, there's 30 million of them. And they fall in 6 categories. The 6 categories are e-com, professional services, brick and mortar product. So you walk in, walk out, and you bought something. Brick and mortar service, like dry cleaners, you break, I fix, any dermatologists, medical outliers, small offices like that, gyms, that would be a brick and mortar service type industry. Hospitality, and then franchise groups. We have a lot of franchise groups.
What percentage of that 30 million is on Xero?
So 93% of that 30 million has no Xero or QuickBooks at all, which is shocking. I see you smiling, Eric.
It's not that shocking.
Yeah. So 93% of them are on nothing. QuickBooks has a couple million customers, but that's including enterprise, QuickBooks desktop and online. So on the small, out of the 30 million under 20 employee, because the 30 million is under 20 employees, there's probably 1 million that are on QuickBooks, and there's probably 200,000 of them that are on Xero, right? And then you have FreshBooks and Wave and NetSuite and a few others. We didn't want to build out, we didn't want to re-engineer a GL profit and loss. So we built around the existing tools because they're just tools. Doesn't mean somebody's using them right with that. And so our platform is really the technology side of the Knowledge Work Cloud.
I'm looking at your pricing page here, and you have 5 different plans for different stages someone might be in their business. What is the real sweet spot for Xendoo across those 5 plans? Are you working with a ton of people at the hustle it end that really, are pretty early on in their business, or are you somewhere in the middle? Or are you all the way at the top of the spectrum with people that are doing, says, more than $100,000 in monthly expenses?
So, we just came out with that pricing in March. Prior, it was 3 plans. So based on, what we have learned over the couple of years, and we've been at this, we launched in November of 17. So really we're, coming up on our 3rd year of having customers. We find that most of the people are in the $295 and $395 plan is where the sweet spot is for them. We have one company that moves $60 million through the business. That's substantial, right? It's a professional service business, and I won't identify which one. But you guys love business, right? So you would absolutely love this business because you see all the business models. Like to give your listeners a taste of some crazy businesses that are out there. We have a customer that they sell over $1 million of just pocket squares that you buy on Amazon. We have another company that buys books by the truckload, and they pay 3 cents a pound for these books. And then they throw away the ones that they don't want, and then they sell them on Amazon, right? We have a customer that their whole business is they're the broker of these really cool exotics and antiques that go in movies. Like, what a great business, right? So besides your regular everyday businesses, we see some of the most amazing, we have, and he's posted on a testimonial. I don't know if you guys remember a TV show called Cheaters.com. Or it wasn't .com. It became digital, but Cheaters, right? Cary Grant's great-grandson was in that show. That's a customer.
When I hear about business models like that, it's so simultaneously empowering and frustrating to hear how some people make money, and often like way more money than I'm making.
And it's crazy, right? It shows everything's possible, that all things are possible out there. I know that we're going to wrap up soon, and we didn't talk much about VC fundraising. I don't know if that's an area that you guys wanted to hit on for people that are listening to, how to find the right VC.
Well, one question I had about that was, on its surface, a VC might look at Xendoo in the way that you are pricing this as kind of a services company. How did you position this as a technology play with, a human element to it versus people looking at this and saying, that sounds like a services company that probably can't scale to what we want to invest in?
So with VCs, they want to see a path to $1 billion company. And so out of the group of us that are changing the way that the accounting industry, there is room, just like, Salesforce isn't the only one that does Salesforce, right? Or Pardo or any marketing automation. So, I believe that easily 7 of us could become $1 billion companies. And so to do that, you need the 100 million in ARR. So there's a new category so you guys are familiar, SaaS, right? Software as a service. There's a new category, and it's service as a software. And so basically it's tech enabled. And so we're a tech enabled platform that's scalable, because it comes down to systems and processes to make it scalable.
How often are people churning off of Xendoo?
Just for breathing, just for small business owners, this segment of SMBs, just for breathing, 2.5% will churn a month. So you will get 30% churn. That's them going in business, selling their business, going out of business naturally. And we're right in line with that. We're a little bit above that, partly because we haven't dialed into our ICP yet, right?
And then you said most people find you kind of organically online. Are you doing anything in terms of paid acquisition or a referral program or anything like that to drive more?
100%. So mostly it's been through paid search, right? Through Google. We've been super fortunate. We have a lot of articles. If you look at it in the press, Steve Case is an investor from Rise of the Rest. Jason Calacanis is an investor from SF. So, Forbes and Inc., Entrepreneur Weekly, different podcasts like that and articles. So we've been super fortunate with all of that. Customers find us organically. We have affiliates. So if you guys would like to be an affiliate, which I would love for you guys to be an affiliate, we offer a $250 affiliate fee when the customer pays the first month. So we have that. How else are customers finding us? We were just getting ready to launch radio when COVID hit. We'd already had all the ads ready, and we were 4 days away from launching radio, and we shut it down with COVID.
If 10 years from now, we look back and Xendoo didn't work for some reason, what do you think would be the most likely reason that it didn't work?
We had a competitor that went out 2 weeks ago, guys. And if you look at Scale Factor, they raised $90 million last year. And they shut down. 2 weeks ago, they announced that they were shutting down. And the reason being is from the CEO's letter to the team. They had 103 employees. It was that they couldn't keep their customers. So, if we don't make it, and I don't believe that at all. I mean, obviously we get up every day fighting the fight and forging forward and to scale, right? If 5 years, 10 years from now, we look back and we didn't, it would be because we didn't take care of our customers. At the end of the day, if you take care of your customers and you bring on the right customers, then you're going to succeed. And you got to have the right tech, right? But if you try to have the perfect tech and you don't take care of your customers, I don't care what, people say, oh, technology businesses, means that you don't have to have humans. No. Every technology business has to have a human, because at the end of the day, when you have a problem, you want to talk to a human.
You talk to a lot of business owners. What are you seeing in terms of the impact of COVID on some of these business owners that are in this category?
It's a great question, Jay. And I'm doing a lot of interviews right now in various magazines in regards to this. And what I'm seeing is that there's two camps. And it's the same two camps in every stage of life. Those who can and those who can't. Right? And so the business owners, like I have restaurant owners that are taking this time and they are redoing their menus. They are adding in the technology that they were missing, changing their point of service systems, putting on the websites. They're revamping their restaurants, and they are forging forward and doing everything that they can in this pause time to better their businesses. And then you have the other group of business owners that are putting their head in the sand. And I think that, yes, this is unprecedented times. Yes, this really sucks to be a business owner. Who wants to get up in the morning and be a business owner? This is the worst time you could possibly want to do that, right? But you know what? It is what it is. And so now find the solution. And there are solutions out there. And if you're a restaurant owner and you want to just keep the same menu you've had for a long time, you're not going to survive, because being able to open at 50% means cut 50% of your ingredients. Find a menu that has common ingredients that you can manage your cost of goods. And the people who do that are the people that are going to win at the end of the day. And as in any kind of economic downturn, for whatever reason, there is a group of people that do way better. And what's the common thread of the group of people that do way better? It's the attitude and it's the outlook.
Love that. Full circle to your attitude and outlook in the beginning of this interview. If people want to learn more about you and Xendoo after the show, where should they go?
They would go to Xendoo.com, Xendoo.com. If they want to hook up with one of our salespeople, they can go to sales@Xendoo.com or info@Xendoo.com. And I'm easy to get to if they want to chat with me. I'm lil.roberts@Xendoo.com.
All right, Eric, we just spoke with Lil Roberts of Xendoo. Sometimes I say Lil's name and it sounds like a rapper.
Lil J, Lil Klaus, Lil Hornung, Lil Roberts. Be a good trio.
You just list off like 5 names.
I also have 3 names. Well, I started with Lil J, and then I realized that doesn't make any sense because it's Lil is her first name. Klaus is your last name, not J. You're not Klaus J. But I guess since we're here, why don't we start with Lil and outline her as a founder? What were your kind of first takes?
I love Lil's perspective on just about everything we talked about. That was one of the most fun aspects of this conversation for me was just the way she thinks about things. She's obviously gone through a lot of adversity in her life, especially when she was younger. But, she's come out on the other side of that adversity saying, a third of your life is going to be really good. A third is going to be really bad. A third is going to be so-so. I got the really bad out of the way pretty quickly. That moved her towards a place of, really trying to make the most out of her life. And after a couple of successful businesses, which is great for the pedigree, she's now on to Xendoo as something that fits her scorecard for how she wants to spend her time. I just think all the ways that she was thinking about how she spends her time really check out with me and also align with what I would want in one of the founders in my portfolio.
I like the kind of concept of, we asked her, why are you raising money? And why are you doing this venture-backed $1 billion rush? And to her, it was kind of like, she went back, she did this scorecard, and she said she wanted this life experience, essentially. I think that's cool. She had a couple businesses before. She probably had some cash flow. She probably could have bootstrapped this, but she wanted to go for something that was more intense.
And along the way, she's also investing right now actively, which to me, if I'm an investor and I'm investing in a founder, nothing really builds empathy for both sides of the table as a founder who's also investing. So it seems like she understands, what she would want to receive as, not receive monetarily, but the way she would want to be treated as an investor. So I'm sure she will operate that way as a founder as well. So check the box.
Check the box.
Check the box. I like Lil as a founder.
Okay. That's what we do here on the Upside Debrief. We just check boxes and move forward.
Yep. We got our own little scorecard here. Yep.
Let's look at the product. So this whole claim of being able to service significantly more, depending on what the actual numbers are. I mean, there's this theoretical number that you can serve, and then there's the practical number you can serve of clients per bookkeeper. We talked a little bit about the proprietary technology behind that. But to me, I would just want to see more how that works, because I can take her numbers at face value that it does work. But it's like, what is being, as a client, what is being automated and what is being, like, what are we still using human judgment for, I guess?
Right. Because you would assume, just the way that the world has evolved, any CPA is using a lot of technology in their business. So if this is an order of magnitude more efficient and scalable than a typical CPA, I still didn't quite understand why that is. But for the purposes of our deal memo here, I'm willing to take that on face value. Certainly something I would want to explore more if we were going down the route of actual investment here. I'd want to get my hands on the product and understand it a little bit more. But I'm with you that, to me, on its face, Xendoo looks kind of like a services business, which is a difficult proposition to raise venture capital for. But here we are, she's raised almost $5 million of venture capital already. So there's more to it. We just didn't quite get there in this interview.
And I think if you think about it through the lens of a services business, whether it is or not, whether it's tech-enabled services or it's service-enabled tech or whatever it is, then you have to think about it from your talent onboarding standpoint. And what does that pipeline look like? Because you can't just have any bookkeeper come on. If you're going to be a services business, you need to have great talent, because services are about people.
Yeah. And even if you are serving an order of magnitude more people, 125 versus 25, you want those same people to be really adept at communicating with that many clients. If you have someone who can't communicate effectively, that's a lot of clients that are having a bad time.
Yeah. It's almost like your people in a tech-enabled services business become more important than they would be in a traditional services business.
Yeah.
So what do you think about the opportunity here, Jay?
Well, she mentioned that there are about 30 million small businesses that fall into their target market. And if you look at the industry vertical, she mentioned e-commerce services, brick and mortar services, hospitality, franchise groups. I don't have personally a lot of experience looking at the books of businesses like this, but I do have a fair amount of experience working with small business owners and can confirm that bookkeeping and financials typically aren't the highest priority item that get a lot of attention and get a lot of love. So I imagine that a lot of these companies, especially at a time like now where they're really trying to figure out what's going on. I don't know, how closely Xendoo has been working with small business owners on things like the PPP loans that are happening right now, but it's just a mess. Nobody understands how to report it properly, how to move forward, how to understand how much cash they have to play with. So 30 million businesses, and she says most of their customers are on the $295 or $395 per month plan. So if you look at the average of that, $350 per month, that's $4,200 a year per customer on average. Look at me doing math, Eric.
I know, this is incredible. It's not even like you're using a calculator. I don't see your arms moving at all typing that in.
Total market size would be something like $126 billion. It's pretty big.
That's pretty big. You have to remember that when we look at market size, that assumes that everybody uses an accountant currently, or that they would use Xendoo at this price point.
Right. That's a total. That's a total size.
Right. Where probably something like 80% of businesses, small businesses that fit that that are in that 30 million bucket, don't. Maybe they use a QuickBooks or something like it, but they probably aren't using a professional accounting solution.
Okay. Well, if we take 20%, that's a little over 25 million.
And I think that goes to Lil's point that there can be 2 to 3 winners in this space because it is big enough.
And, even if this is people intensive, she mentioned one Xendoo CPA could work with 125 clients. That scales to a point. So it's a big opportunity. And I see that, but it does seem fairly competitive to me, even with, she says they work with QuickBooks, they work with Xero. And I believe that to be true. To me, the biggest question is just a marketing question, which I brought up because if, as you're pointing out, if only 20% of companies are going to use a software or a service like this, are they going to understand the nuance between Xendoo versus QuickBooks or versus Xero and why they need it? How are they going to find Xendoo? Those are some of the questions that are kind of follow-ups that we talked about, but didn't get as much insight as I would have liked. I'm sure a lot of that can be attacked with paid acquisition, but we didn't talk about cost per lead or lifetime value. So on its face, big market, big opportunity. What's the customer acquisition look like?
And I think the other side of that, which would be the thing I want to look at in 6 to 18 months, is churn. So she mentioned it's a high churn industry, just in general. But when I think about accounting and accountants specifically locally, so much of it is anchored in relationships. So in my full-time job, we'll have someone who's used the same local accountant that has an office in the front of their house for 30 years, just because, it was their neighbor from down the street and they signed up with them originally. Now they have a relationship. So when you have Xendoo, how do they recreate that localized relationship to the point that you're not going to have that high churn? Because if it's just a transactional relationship, you can break those off very quickly. You can go with whatever. But if you can have that client relationship be stronger somehow while still having 120 or 60 relationships per bookkeeper, I think that's kind of the magic, is how do you create some
relational stickiness?
Relational stickiness is such a better phrase than talons, which is what I was going to use, which felt very strong. But yeah, that's my 6 to 18 months is what are they doing to incentivize or to de-incentivize churn? What about for you?
I would want to look at a progression of month over month. You're talking churn, you're talking retention. I want to just look at acquisition and what the trend looks like, because similarly, you don't want people to churn out, but it sounds like a big part of their acquisition business model is an affiliate model. And so if people are happy, if they're sticking around, if they're referring it, I would assume that their growth would be fairly exponential. And I would want to look and see if that is true or not. And ultimately, how far is acquisition outstripping churn?
And I think, I have one point on that. A lot of times small business owners are friends with other small business owners. So there's probably some sort of NPS score that you could look at on the acquisition side of things to see how much is coming through word of mouth? How much is Jay owns a barbershop and he told Eric, who owns the coffee shop next door, about using Xendoo and how amazing it's been for their business?
Well, we'd love to hear your thoughts on this episode. You can tweet at us at UpsideFM and let us know, or email us hello@upside.fm. If you want to check out Xendoo, there's a link to check them out in our show notes and on our website as well. Otherwise, we'll talk to you next week.
That's all for this week. Thanks for listening. We'd love to hear your thoughts on today's guest, so shoot us an email at hello@upside.fm or find us on Twitter at UpsideFM. We'll be back here next week at the same time talking to another founder in our quest to find upside outside of Silicon Valley. If you or someone you know would make a good guest for our show, please email us or find us on Twitter and let us know. And if you love our show, please leave us a review on iTunes. That goes a long way in helping us spread the word and continue to help bring high-quality guests to the show. Eric and I decided there were a couple things we wanted to share with you at the end of the podcast, and so here we go. Eric Hornung and Jay Klaus are the founding parties of the Upside podcast. At the time of this recording, we do not own equity or other financial interest in the companies which appear on this show. All opinions expressed by podcast participants are solely their own opinion and do not reflect the opinions of Duff & Phelps LLC and its affiliates, Unreal Collective LLC and its affiliates, or any entity which employ us. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. We have not considered your specific financial situation nor provided any investment advice on this show. Thanks for listening, and we'll talk to you next week.
Never mind, bro, that can't be matched. I'm lighting it on fire, used to run victory laps, and still I'm not even tired. It's all about the timing, yeah, that's what they say. Well, I'ma keep on rhyming.